Hello guys, welcome to my page. Today's video is going to be about Coke, ticker symbol COKE. This company is the best company I've ever evaluating using my system. I have never seen a stock that has so many attributes that are so attractive to me before. This is a sleeper stock. It's a very boring company. They bottle products for a bunch of different companies. A lot of your favorite companies are involved with this company and you just don't even know. I made a short that I'm going to link and it's going to be connected to this video as well that has a lot of information about this stock that's not going to be contained inside of this video. So make sure you go over there when you're finished and check it out and give it a shot. A lot of people have been liking it so far, so hopefully you're one of those people as well. Let's start at the beginning. The gross profit for this company is phenomenal. I mean, it's not going to be perfect, but as of late, the stock has been performing really well. And as you can see historically, it has performed very well. And that's what you like to see. You like to see a company that's consistent in what they're doing and how they perform. If you see a stock that's up and down and up and down and up and down and inconsistent, it might be a cyclical company, but some companies, the cycles don't really perform the way they're supposed to perform. The cycles are unpredictable. And those companies do perform well, some of them in the long run, but it's just not for me. I like to see a company that's steady with what they're doing and consistent. So this checks off one of my boxes. This is one of the things that I liked about this company. But moving forward, the EBITDA. The EBITDA also is very good to me. I like to see, like I said, that steady growth. The attributes that I pick for the companies that I like are very important metrics. These are just going to be a few that I'm contained inside of this video, but I have at least 50 different attributes about a stock that I evaluate when I evaluate a stock, and EBITDA is one of the most important ones. When you evaluate a stock, you can't just look at a stock and look at the chart and say, oh, the chart looks good, I'm going to buy this stock. No, you can't. You have to go in, dig in, read the financials. The more financials you read, the better at it you get. That's all you have to do. Keep reading them and reading them over and over again. It's just like it's just like riding a bike. You are going to get better. You won't fall all the time. Net income. Net income is not as good as I would like it to be, but as of late, it seems like this company is just on fire. Like the way they just rake in money, it seems like they're so large and so important. Like they seem to have pricing power with their customers. And nobody seems able to perform as well as they do with the volume that they get. Because the companies they work for, like I mentioned it in the short that I talked about a little bit earlier, that they have all these different companies like Target, they bottle for Target, 7-Eleven, Costco, one of the best performing stocks ever, in my opinion. Yeah, they're very, very, very diversely company that just goes out there and makes connections. Excellent, excellent net income. Earnings per share. Again, it's not a perfect chart like you would like to see with a lot of stocks. There are some inconsistencies, but overall, they seem to have done very well, in my opinion, for a company that basically is boring and just bottles for a lot of different companies. But the way they do business, the improvement that they have made over these years, it's like phenomenal. If I could choose one stock to own and I could only own one stock, it would be this stock. Because everybody's going to need bottles for whatever products they have. And it seems like every single day there's always a different new drink company that's putting stuff out there. And these guys are sitting there just waiting to scoop up that market share. But moving on, shares outstanding. As you can see, historically, they haven't bought back a lot of shares. But I like to see a company that buys back shares. And as of late, they seem to be doing this. They seem to be buying back shares, which increases the shareholders' equity in the company. It increases the value of your shares in a positive way when a company is willing to buy back shares. And that's one thing I like about this company, that they have that potential. In addition to paying a dividend as well, if I might add. So they're buying back shares and paying a dividend. They just did a special dividend, as a matter of fact, like $15 a share. And it's a low float stock where there's not a lot of shares out there. So they have a low float and they're buying back shares, which is amazing value for customers. Amazing, amazing value. Profit margin. The profit margin hasn't been perfect either, but it's steady, and over like the past like 7 years, it's been increasing. It's like they have that pricing power where they can just go out there and name their price. And their customer is going to be like, okay, well, it's expensive maybe, or it's cheap maybe, but we know we can't get a better price there. We can't get a better value. So we may as well just go ahead and move forward with this and do business with this company. Yeah, profit margin. It's never been in a negative for like the past, what, 14 years? You can't be beat. When you see a company that's so steady with their profit margins and with their margins, you know that they're doing something right. You know that management has their pulse. They're at the hand on the pulse of the company, and they know exactly what they're doing and when to do it. This is what I like to see. The PE ratio. The PE ratio, a lot of people say that the PE ratio for a company should be 15 or lower. I don't believe that. I don't believe in it. Some companies are going to trade at a higher valuation, as this company is. This company is at like a 24, 25 PE, but historically it's been higher than that. If you look at the 2014 to 2017, 18, the company was trading at a higher PE ratio than it is now, and the price was lower. So me looking at the stock and evaluating it from a historical point, I don't feel like this company is overvalued at all. I feel like this company is very undervalued, and people are going to notice it and they're going to start scooping up shares. And like I said, there's only like 15 million shares, less than 15 million shares. So if you can get your hands on a couple of them, you'll be okay. The free cash flow. You can see that bar in the middle. That's the free cash flow. And it hasn't been perfect, but look at how it's going now. It's going parabolic. Like the way they make money now, hand over fist, this company is looking like it's ready to just rocket off the charts. Is this going to continue? Nobody can tell the future. But me looking at this chart and looking at the historic performance of this stock's free cash flow, and looking at it now for like the past, what, 6, 7 years, amazing, amazing free cash flow. They're getting so much better at doing whatever it is they do. Like, it cannot be denied that as of late, from like 2019 to 2024 now, they have been on a tear with the free cash flow. And I think it's because of the pricing power, because every time I read the metrics, it goes to that. The current ratio is like the company's ability to produce money from whatever they invest in. I like to use this metric. It's like a quick ratio. Look at it and see what they're doing, what their assets are, what their liabilities are. You can see there's a spike right now in the assets and the liabilities. So it's not like one is going up and one is going down, and one is going down and one is going up. Both of them are going up right now, which the company is reinvesting in itself to be able to service their customers more and service more customers and service them better. That's something that I like to see as well. I would like to see the assets going up and the liabilities coming down, but A company has to reinvest in itself in order to keep that edge, in order for to not let other companies come in there and steal market share. You have to. You have to. I want to take this time to ask you guys to like, subscribe, and comment. If you like the video so far, if you feel like I've produced value for you, follow me if you'd like. I would love it. I would love to have you guys here. We're trying to build a really great community here, and I would like for you to be a part of it. But yeah, debt to equity. Like I said, the debt is going up, and so is the equity is going up, which is it equalizes itself out, in my opinion. It's not like the company doesn't generate. You've seen their free cash flow. You know that they have an ability to pay off their debt as well. So I'm not too concerned that both the liabilities and the assets are going up. That doesn't bother me too much. Now, if I see the liabilities going up and the assets coming down, then that's like a huge red flag. Like, whoa, something is going on with this company that I don't like. I like to see a company that has good returns on equity as well. If a company knows how to invest money and get more out of that money that they invested in, it's really, really attractive to me. And this company is consistently, yeah, there's a couple bumps here and there, especially as of late, with things being so hot with inflation and all this stuff that's going on with the economy, high interest rates. But their ability, nonetheless, to perform like this, great returns on equity, is very impressive to me. That's another thing I liked about this stock. I didn't find much wrong when I evaluated this stock. It was difficult for me to find something wrong with this company. Like their returns, period, on equity, on capital, on assets is just amazing. It was, like I said, every stock I evaluate the good, the bad, and the ugly. And this company was just smoking everything. Return on assets, the same thing. And you see it consistent for years and years and years, and then it just starts to go up and up. There's a little ups and down. I'm interested to see how this company is going to perform when when interest is lower. Because they're doing this right now with high interest rates, and customers are willing to pay these prices. And they have to buy materials as well, so that's probably part of their pricing power. They are the big dog in whatever it is they do. And everybody's going to have to come to them, or they're going to have to go to somebody else and pay more and get less quality. And you don't want that right now. Everybody wants quality. They want great products that look good and that are safe for their customers, because they don't want to have to pay out people because they damage people. And Coke is consistent. Like, what's not to like? Many things. Other thing I love about this stock, the special dividends, the high insider ownership, small float, institutions are buying. The price to sales right now is below 2, and they have just as much cash as they have debt. So they won't have a problem paying off all that stuff. But yeah, I love this stock. Ticker symbol COKE is an amazing stock to me, and I would like for you to check it out for yourself. If you like this video and I provided value for you, just make sure you give me a thumbs up. I would really, really appreciate that. Give me a follow if you'd like. I would like to have you on the page, so you don't miss another video. I'm going to be making videos about stocks that are a lot like this one. All of the stocks that I put up here are going to be good stocks. It's not going to be clickbaity and all crazy and a lot of that gimmicky stuff that a lot of other pages do. I'm going to give you the facts and provide a value for you. Thank you for coming. Bye.